the pound Swiss, the euro Swiss, well, we might as well do, I mean, if you look at the radar screen, you can see just these are the Swiss pair. The Aussie Swiss is up 65, the pound Swiss is up 106, the euro Swiss is above 69, so it's pretty much the euro Swiss and the Aussie Swiss, and you can see that the euro Swiss, as I told you, is weak, and the same thing with the euro. The Aussie is also, I told you, it's kind of weak, so you can see their move is pretty much close to each other. And if you look at the dollar, it moved also 60. So think about it. The euro is equal to 1.4 US dollars, and it only moves 69 cents. And something like the dollar, which is about 70% of the value of the euro, has actually moved by the same amount. This tells you that the dollar is stronger than the euro, and also as stronger or as equally strong as the Australian US dollar. If you look at the Swiss yen, we'll get to that anyway. Look at the Swiss yen. This thing is down 73. This means that the yen has strengthened about 73 pips versus the Swiss, which is also a pretty good indication for us. So anyway, having said that, then the next one we're going to look at is the Aussie Swiss, and this is you see the same thing again. It's identical to what we have seen in the British pound. And if you look at the weekly chart, I mean, this is a serious bear market if the Aussie, with regards to the Aussie Swiss, but what we're having again is a short covering rally. This is still our structure point, and we have two structure points over here too. So you got the 86.99 and the 86.67, so you know what that means. Okay, and we are going to buy this again above the high, so it's not brain surgery here. So the close of the week is 80.40, the high is 80.60, so we're going to buy it above 80.60. So the Aussie Swiss is a buy above 80.60. Alright, and if I buy it above 80.60, which is this high, I'll place, unfortunately, there's no place for me to place the stop unless it's below the 79.81. That is my market side, so that is 79.81, that's my stop. And if I buy it over here, that is my structure. And I have two of them at the same place, so that is pretty good. So my structure long is the 86.99, which is we have already picked from last week. So, but we're going to transpose them because the 86.67 is actually closer on the way up. And if I'm going to go for a structural short, let's find the short point first. There is no reason for us to go short unless it trades below the 79.06. So that is our short point, 79.06. And let's see, my structural short, I don't have, I mean the structural short is the all-time low over here, and that is going to be our prime momentum low, which is 71.42. So our structural short is 71.42. And if we are going to go short, now this is, I don't really get into explaining these points here, Paul. It's not, it's way beyond the trade planning session. This is stuff that we teach in the course, and it takes us 7 or 8 days to explain this. So you just take them for now, take them at face value and use them. And if we go short at 79.06, we're going to place our stop above 79.60. So our short stop is 79. Okay, so So if we want to look at the chart, we're going to go short below the 76, 79, and if we do, put the radar screen for you, actually it's going to be better. So for the Aussie Swiss, we are going to buy above 80.60, and if we do, we have a structure point of 86.67, Paul. This means that you have a potential of an 800 pip move to the upside, and your stop is 79.81. So you're risking about 80 pips in order to make 800. That's a good risk reward ratio. On the short side, you're going short below 79.60. Your structure short is 71, so again it's 800 pips below here. And if you're going to go short at 71.06, your stop is 79.60, you're risking 60 pips. So again, your risk reward on either side, to the long side is about 9-1, and your risk reward to the downside is also about 9-1 or 10-1. So that's a pretty good trade. Okay, that is the